Hi, I'm Patu from freefincal. Let's talk about the two new funds from Zerodha AMC, Zerodha Nifty LargeMidcap 250 Index Fund, and the same index fund with a ELSS variant. So it's quite simple to reject the ELSS variant because now with the new tax regime becoming so much more attractive for many people, especially young earners, I think there's no point in investing in ELSS funds anymore. Of course, yes, it makes some sense for some people to invest in ATC, Section ATC savings, but you don't need to, even for those people, you don't need this new ELSS fund, right? There are other ELSS funds available. You can invest in them. There's really no need for you to consider this ELSS NFO. So that leaves us with the large mid cap 250 index fund. So this index fund is rather special in the sense that it is 50% of Nifty 100 and plus 50% of Nifty mid cap 150. So instead of market capitalization weighting all the 250 stocks, like in the case of, for example, the Nifty total market index fund, the total market index fund had 750 stocks fully market capitalization weighted. So it basically was looking more or less like a Nifty 100 fund, and that's the main reason why we said there's no point investing in this, in the total market index fund. But in the case of the Nifty large mid cap 250, it's 50% Nifty 100 and 50% mid cap 150, and within that 50%, it is capitalization, market capitalization weighted. So it has got a significant exposure to mid cap stocks. Now, this can be good or bad. Now, currently, mid caps are doing well, or maybe that's in the past tense, I don't know, at the time of making this video. So, currently, if you look at the large mid cap 250 index, it will look like a great investment. But when the mid caps start underperforming, and when the mid caps start falling and the large caps start moving up, that can happen. And we don't know when the outperformance underperformance cycles will end or kick in or whatever. And when the outperformance cycle ends, then considering the no the tracking errors, considering the expense ratio, etc., then this 250 stock index may not look like a great idea. So here are 2130 10-year rolling return data points of the Nifty large mid cap 250 index. That's the brown line. So there are 2130 data points in the brown line, and the pink line is the mid cap 150, and the yellow line is the Nifty 50 TRI. All of them are total return indices. You can see that the brown line uh, outperforms the Nifty 50, but at times it falls on top of the Nifty 50. The gap, the margin of outperformance basically becomes essentially zero. If you take into account expense ratios, tracking errors, and so on, it essentially is zero. So you don't know when your fund will outperform Nifty 50 and when it will not outperform Nifty 50. That depends on the sequence of returns. Currently, it looks like a very good investment, but this cycle will fall down. So you can actually see it's already started falling down here. The two large mid cap 250 has already started falling down. We don't know whether it's going to continue falling down or go up. We don't know all that. But I'm just saying, expect significantly more risk than Nifty 50 in this 250 stock fund. And this higher risk will not always translate into higher reward. That is a silly thing to say. More risk means more reward. That's just silly. The risk is guaranteed, the reward is not. It's only potential reward. That depends on sequence of returns when you start investing. That's just blind timing luck. So you must appreciate these things, but more importantly, what you should appreciate is that, do you really have any space in your portfolio for this index fund? I mean, you may want to invest in this new fund. You want to you want to invest in every shiny thing that comes in your way. But does your portfolio have logical space? Are you even capable of finding out whether it has got space or not? That is even more important. I'm not sure about everybody doing that. But if you need professional help, you should get advice. But if you can logically argue, yes, there is some space in my portfolio for this index fund. After all, there are only three funds of tracking the large mid cap 250. One is a fund from Edelweiss. That fund is less than 2 years old. Only in November it will become 2 years. And they took their Nifty Bank ETF and merged that a few months ago. So, I mean, essentially, in every fund in this space is a NFO. So, you might as well pick the Zerodha NFO instead of the Edelweiss fund. However, do it only if you have an actual need for it. Whether that is, the portfolio should have the actual need for it, and you should be capable of actually determining whether the portfolio has a need for it. So those are our recommendations, and please don't expect, and if you do end up investing in this, don't expect a joyride. It will be very risky, and that risk will not always translate into higher rewards. So ignore the ELSS NFO. Consider your portfolio. Ask yourself, do you have any real space for this? What about the overlap with your existing funds, etc.? And if you're an seasoned investor with several funds, I'm very sure you have no need for this index fund as well. But maybe if you are just starting out, this is okay. This is not a bad fund to invest in, but be careful. It will be significantly more risky. There can be periods where it will underperform Nifty or the Sensex. So you'll have to be mindful of that.